June 2026 DNA webinar, Unfiltered Lessons from a Former Funding Portal CEO, what actually gets a campaign funded from the other side of the table. Joined here by Bruce Virga, DNA's new head of strategic partnerships. I've known Bruce for many years. He is a thought leader in the regulated investment crowdfunding space, a former founder of Title III funds, and lucky enough to have him here at DNA. Bruce has worked on over 50 deals, spoken to hundreds of issuers. We're going to hear about what some of those discussions look like in terms of planning, what's worked, what hasn't worked across these deals to successfully raise, what tips that we have for you, issuers and service providers and VCs that are attached to different deals here. Bruce, honored to have you on. Great to be in your first DNA webinar.
Pleasure to be here, Jason, and I'm really loving the first month at DNA and love the team, like the mission. I like the way that you support all these issuers, and like I said, happy to be here.
Excellent, excellent. Glad the feeling's mutual. I know the team loves having you as well. Bruce, you have a career of success, leading effective teams, hitting very large goals. What gravitated you to the world of regulated investment crowdfunding? I love tapping into the why. Before we pull up our deck and start going through all the different points and checklists and templates, what brought you to this space?
So it was new space to me. My neighbor actually introduced me to it. He'd got licensed in 2016. He was a VC at the time, and talked to me about crowdfunding. And all I heard about really was Kickstarter and all of that at the time. And then I heard about like Oculus goggles and how he raised a lot of money and then he sold it to Facebook, and all of those people who invested or actually donated to Oculus never got paid out. And if it were in this type of crowdfunding, they would have all made a lot of money, just like Palmer Luckey did, that kind of thing. So I started looking at the different platforms, and this was back in 2018. I just had an exit with the software company that I was involved in, and had to work for them for a year, and then I just said, all right, let me do something else. And I got into this crazy business. So here I am. And I've been working at Title III funds and building it since 2019 until just recently.
And you're known for giving transparent, valuable insights to founders. You've told groups not to use these exemptions. You've told them how to do it successfully. It's funny, I was brought to the space with that same story of Oculus and hearing about their billion-dollar exit 6 months after a successful crowdfunding campaign. And I saw many startups and growth stage companies with no visibility, no awareness, no funding, and basically shut their doors in the early stages of my career. So I saw this as a real opportunity to see a higher success rate for growth stage companies, access to capital beyond one's first degree network. So I think we're here for a lot of the same reasons.
Yeah, I think transparency and straight talk with founders is sort of my badge of honor. I'm a founder myself. I don't want anybody to BS me about anything. I just want to be able to make decisions based upon like truth. So when I have conversations with people, it's real. I just don't want to sell anybody. I just want people to go into things with their heads up.
Only way to measure is with numbers. We're going to get into some of those stats, some of those metrics today, some of what we pull from King's Crowd and Crowdfund Capital Advisors. Brendan and Jack and our creative team put together these decks every month. Full access to these. Reach out to us. We'll get you the details. Have video shares of this, but going to walk through it here today. Unfiltered lessons from a former funding portal CEO. There's about 70, 90 FINRA regulated portals live at a time. That's not an easy thing to do, not an easy thing to earn and become a portal. It's not a straightforward process, right?
Oh boy, it's right now the barrier to entry is probably a year and a half from when you start. And you know what? If you don't have a few $1 million to really make a portal work, you shouldn't be doing this. It's not for the faint of heart. First of all, it's also a tough business, so you kind of have to have capital to keep going while dry times are happening for you. And everybody thinks WeFunder, Start Engine, Republic, all of these other ones, and why would you get into the crowdfunding business? I think though that each of these new portals that are coming up, they have a specific focus and a reason for doing it. So power to them. Try it. Everybody can't go on the same platform.
Yeah, I'll see about that range live at a time. Meanwhile, 10, 20, maybe 25 portals that are actually raising any funds any given month. We, of course, go on a King's Crowd every Monday morning. We do a weekly report. But even with that education, it's important for me to remember the information presented in the webinars for educational purposes only and reflects opinions and insights from DNA. Working with crowdfunding campaigns and our marketing initiatives. We're not securities attorneys, financial advisors, or broker dealers. Other seats on the table that play a very important role on this, and you should be speaking to each of those professionals, each of your team members accordingly. So you should not look at this presentation, should not construe it as legal, financial, or investment advice. Always consult with the right legal and compliance professionals. Like Bruce, we want to be compliant, we want to be transparent. So important for me to mention that. Bruce, I want you to open up on some of these portals, but the landscape as a whole. But I want to start by saying the hard truth. About 9,000 issuers to date, a little 10,000 Reg CF campaigns, roughly half, about 100, 115K, that median level. Half of the issuers are not raising beyond that, not a million, not 1.235 million, not 5 million. Really, only 10% of issuers in 2025 hit $1 million or more on Reg CF. The medians, if we're looking at averages, you're talking mid 200s, mid 300s. Less than 1% hit the full 5. That was 5 deals last year. Happy to say worked with several of those, but it's not as simple as launching one of these and you're going to raise 5 million in 2 or 3 months. Small share of deals capture most of the investment. Most founders expect the platform to raise it for them. So the platform's not the campaign. Bruce,
super important,
yeah.
Super important point, Jason. Okay, so from 2019 until just recently, I literally have spoken to about 4,000 founders. I had my Calendly set from 10 to noon, and founder after founder interested in crowdfunding, and they all thought, 99.9% thought that getting onto the platform is going to get them funded, because for some reason that's what they think, and I'm just trying to tell them the platform is one thing. A small part of what you're going to raise is going to come from that, but it's really not enough to move the needle. So there's so much you have to do to get ready for success. And I just keep telling people, it's really not the platform. We're not going to bring investors in for you. You need to figure this out, and we can help you, and we can introduce you to the right partners to help you figure it out. But we have a different responsibility than marketing you. And just because some platforms have 100 deals listed, it doesn't mean that investors go onto those platforms and think, oh, what am I going to invest in today? It's not the way it works. It's really dependent on people you can bring in to look at your offering to invest in you. And that's what's going to drive 95% of what is invested. So that's an important. Yep.
Some of these platforms over here are self-publishing platforms. So the company, the issuer's website is appearing to be their URL, perhaps with the prefix of invest.companyname.com. It's not on a marketplace. Start Engine, WeFunder, Net Capital, different. There'll be volume. Start Engine, maybe 20, 30 deals live on there that are CFs. WeFunder, maybe 100, at times as high as 200, 280. Net Capital, about 20 at a time, at times 40 or 50. So yes, you could see some visits of their site, some of those visitors getting to your deal. But if there's not enough traction, if there's not enough momentum, they're not going to care about it.
You know what? It's statistics. There's a difference between like statistically what people on those platforms will invest in you versus what the reality is. So it really has to do with quality of the deal, how it's presented, and how it's marketed. So anyway.
And like you said, there has to be enough people from your first degree network, your second degree network. You know, what does it show if there's no amount raised on there? It just leaves it up to beholder, if you will. What does it show if there's $12,000 raised, or even $62,000 raised, and you're stating in your offering page that you're going to disrupt an industry? Meanwhile, you can't cover the monthly burn rate with what's been produced thus far. So you need to stand out on these platforms. Any of them would tell you that if you're on a marketplace and if you're self-publishing, you're responsible for all of the traffic. So I've heard that too many times from issuers. What do we have going on this page, Bruce? What would you want to say about that, just to go a level deeper?
Okay, so the portal is the intermediary. That's really all that we're involved in, is we're making sure that we're trying to find good deals for investors, and we're trying to find companies that will succeed on a platform. So what does that really mean? So a lot of companies think, like I said, if you get on the platform, that's going to magically raise money for you. So no, what you really need, I've seen the founders and their team have to be seriously engaged in this. If they just think, all right, let me fill out the Form C, let me do all of the stuff you tell me to do, and passively put it up there, nothing's going to happen. Nothing. You spend all of this money and a lot of time with your Form C, with hiring a CPA, and nothing happens. It fizzles because you're not engaged. The good deals are like founders who are really on top of this and take the advice of all of the advisors on how to really make this happen. So what you need is an engaged founder. You need to have money. If you don't have any money to spend on marketing, it's not going to work. I have not seen it work. I don't think at all, ever. If you don't have anything going on, you really have to take this seriously. Like it's like it's not marketing your product, but it's kind of marketing. It's the same go-to market attitude as if you're going to market your product. This is marketing your investment, and you just have to really understand how it all works. Otherwise, really don't waste your time. Don't waste your money. That's kind of what I've been saying to founders for the past 6 years.
Yeah. They think that billions of people online a day, if they get their deal onto a platform, hitting digital audiences, they're going to be able to raise millions, and overnight, this business is their baby. They have the cutest baby, and without a traffic source, without engaging content and updates, you're simply not going to stand out, let alone get the visibility among other issuers. What a funding portal actually does and doesn't do for issuers: they confirm the deal is compliant, run bad actor checks, vets to a point, so they're vetting each section of the deal. What portals don't do: judge if the business will succeed, predict if the campaign will work. Some will say they're selective, but they are wrong constantly on which deals are going to hit 1 million, let alone their full goal. They'll have plenty of campaigns. Some of the top platforms, if you look on King's Crowd and go into the advanced search, have a plethora of listings under 50K, under 100K. They may say, hey, there's more being raised that you can't see, or there's a Reg D and it produced more, but just measuring apples to apples, underperforming campaigns. Market or bring investors. They have to treat every issuer the same, give them the same offerings. Some will offer different marketing capabilities, but that should be really envisioned as an add-on on top of what you're already doing. Compliant does not mean successful. I'll see founders, CEOs spend months to get their campaign up and running and think that is the finish line, when that is really just the starting point, and hopefully they've done some pre-launch marketing, maybe a test the waters campaign beforehand.
So on that list of what portals do, I would reverse the bullets. So what a portal really does is you'll speak to a founder, you'll try to get a feel for you think it's going to be successful or not based upon the fact, do you have an audience, do you have something interesting, do you have marketing dollars to back yourself. So if you have that, okay, let's talk about let's signing you up to get onto the portal. First thing that we would do would be run bad actor checks, because if you fail the bad actor check, why go any further? You know, so you can't do anything about that. And then to make sure that the deal is compliant, well, everything has to go through attorneys and make sure that it's compliant. And you have our in-house attorney just make sure everything is what it needs to be. Did you lose the slide deck? I don't see
Just
it.
pulled it down for a second. Wanted to
Okay.
focus on you here. But yeah, let me pull it back up so you can see the list.
Yeah, so that's it. I know the list. So that's basically what we do is make sure everything is compliant. But really, attorneys do that for us, and we are regulated by the SEC. We're FINRA members, and we have to answer to FINRA. Actually, we have to answer to FINRA every year or two with an audit to make a random audit of making sure you're compliant on everything that you do. There's a lot of work in what funding portals do.
Is answering to FINRA easy?
I think it is not hard, because what happens is, for the portals who haven't been through this yet, been through it a number of times, is they'll send you like a random list of what they need, and you should be able to have that at your fingertips. So what I did was I hired a compliance advisor to help me through answering FINRA questions, and that makes the job so much easier rather than me having to do it all myself. So I would suggest hiring a compliance advisor, and if you want to know offline who that would be, I can tell you like a really good one. And that gets you through it. So to me, it wasn't that hard. It's more work for the team to pull documents and everything that FINRA requires, but it should all be there, because you need that to be set up before you can actually be a funding portal. So I didn't think it was hard, but I didn't do the actual nitty gritty of the work.
It shows you were organized and had the right team. I've
Right.
heard about the scrutiny and some of the types of communications from governing bodies. I've spoken to FINRA at CFPA events in DC, and during their presentations, their keynotes, they make very clear, they want to be collaborative. They want to make sure everyone's following the rules and to a T, but are not out there to be feared as much as just make sure there's safety and security on all sides of the table. I know this is a topic that gets brought up quite a bit with portals of, is this product fundable, crowdfundable, or not yet? Honest gut check before onboarding, right company, right story, right readiness. Not ready means build first, raise later. I know from the marketing point of view, one of the questions I ask is, how large is your audience? Back to that concept of you want to bring that first tranche of investments. So do you have an email list? Is it over 1,000 people? Is it over a couple hundred that you could contact directly? If I hear the email list is 10,000, 30,000, 50,000, 100,000, 2 million, the projections of how much traffic can get to that offering page on the first day, the first week for the month are exponentially different. What type of updates, what types of product announcements will you be including as part of your content calendar? What relationships with publishers and different types of partners have been seeded? Does this reflect something I'm reading about in the news, in the media today? I can tell you after the SpaceX IPO, there's a lot of space companies that are entering the space and looking to raise capital, and some of them have similar types of plans and paths. Even just after a CF or an A+ has a successful round, we'll see more groups from the same industry, the same vertical inquire through our site or be referred over. So that's a big aspect of it. But I know, as I mentioned earlier, portals get these predictions wrong. I certainly have. I've seen solopreneurs raise full amounts on these exemptions, on these filings. I've seen other groups with celebrities attached that have underperformed. Uh, it's tough to say one way or the other. Anything to add there, Bruce, before we move on to the next page around setup?
Yeah, I think what you just said was really important. Crowdfundable. I thought I made up that word, but I guess maybe I haven't. Uh, you can't, nobody knows, right? So you would think that you're not crowdfundable, but the founder really wants to proceed. They have the money to go forward. So you say, all right, give it a try, and hopefully they're engaged, like we talked about. Hopefully they have, and hopefully it works. But sometimes it does, sometimes it doesn't. And you're right. The ones that you really think are going to like succeed, it's like, what's happening? How come nothing's happening? You just don't know. It's marketing, and marketing is hard.
Marketing is hard. There's inherent obstacles with marketing. Not every campaign succeeds. Same with capital raises. And I'll look at the success rates. I think it's under 4% of deals that get funded at the VC level. And stronger percentages here, not to say, hey, this route's better. If a deal could get funded offline from the right strategic investor with a couple conversations, that may be a preferred route. Could talk to all the benefits in comparison of audience building and the awareness and having thousands of shareholders or investors and what that means for future marketing and initiatives. But I will say, I was reading an article the other day about elite athletes and how they're obsessed with the fundamentals and not interested in shortcuts. And there's examples of tennis players who, 20, 30 years into their tennis playing, let alone career in some cases, they're still working on proper forehand technique and backhand, have coaches just for it. And taking that to business, taking that to investment crowdfunding, how many issuers do we speak to that think they can do one thing and just raise the full amount versus really get that connectedness to the fundamentals? I've seen some of those celebrity deals just think, hey, they're tens of millions of Instagram followers, probably going to crash the site of this major portal, and then very few people show up that day. And the content creators doing different posts, there's all the reasons attributing to why later. But those fundamentals of having traffic sources, content calendars to keep audiences engaged and to the point of action, really inspiring that, anticipating 7 or more touch points, not just a single post. Having those fundamentals dialed, regardless of who's involved or not involved or what audiences exist or not exist, I still can find as consistencies across the top campaigns. And that's why we create this content. That's why we're constantly speaking about why campaigns work or don't work in the space. We want to see a higher success rate industry-wide. Even hearing that 10% hitting $1 million or more, that should be much higher. I want to see more issuers using these vehicles as a whole. So that's what I'm constantly emphasizing. What about
Going live in a few weeks, huh?
Yeah. What about the timeline?
Well, it's totally dependent upon the founder and their team and the action that they take. You can get live in 3 weeks. So what's involved? Bad actor check. It takes a few days. Pass the bad actor check, then we would introduce you to attorneys, CPAs, marketing companies. Get engaged with all 3 of them as quickly as possible. You have to work on the Form C. Form C is hard. There's a lot of work involved in the Form C, but you have to do it. And so you start on the Form C, you get the CPA engaged. Now, a CPA, when you engage them, you give them the information that they need. If you give them everything at once, they can go to work and be done. If you give them half of what they need, okay, they'll circle back. And then other people will come in their queue, and now you have to wait a week. So you just delayed it because you weren't on top of it. And then marketing agency. Don't wait until you're ready to go live to hire a marketing agency. Start now. You need to start a month in advance, getting everything together with professionals that know what they're doing in this crowdfunding space. So it could take 3 weeks. It could take forever. I've seen some people, they just never launched because they just couldn't get into it. They're busy, maybe whatever they're doing in their business, or lazy, or whatever they are. But it's driven by the founder. It's not driven by the platform. Although, we try to project manage people and move them through the process, but ultimately it's the responsibility of the company raising capital.
Funny what you mentioned about marketing there. I've seen deals delayed for 18 months on Regulation A plus filing and going through the Form 1A. I've seen 2 months, 6 months past the penciled in, launch date for Reg CF. So as a marketer, I look at that as wasted time. As a marketer on investment crowdfunding campaigns, I have a clock ticking loudly, staring at me throughout the entirety of the campaign. Time is the most valuable resource, could be said about life, could absolutely be pointed to for a fundraising campaign. Many of these deals, they're live for 3 months. Perhaps they're getting extensions past that. Maybe it's 6, maybe it's 10. Some campaigns 12 months, but even 12 months, it goes by like that. And you have your launch trajectory. You then have dips. You have increases throughout the campaign, hills and valleys, if you will. You want to take as much advantage as you can of the live campaign. The pre-launch, especially if it's test the waters, that you're able to get reservations, you're able to test marketing channels, you're able to start forming those relationships with people who have a large and engaged pool of your target markets and could inspire them to get to your offering page on your behalf. So I've seen deals where they've built their audience by thousands of new prospective investors, new reservations a month. I've seen deals do nothing in that period of time and have a very slow launch. So before you launch, repeating what I said there a little bit, growing your social and email audience during setup. Want to speak to legal about this to make sure you're being compliant. If you're in a formal test the waters stage, if you're not, what you can do will be looked at as priming, what you can say, what you can't. But there are ways to run your business and market and build an audience. Strategy months ahead, not at go live. I'll see so many issuers think, hey, we're just going to test one marketing channel. We're just going to run meta ads, maybe do some updates on the offering page or have an email drip running and think that is sufficient. Really, you should be building a marketing strategy and well ahead of time. This should be an algorithmic roadmap to your goal. We've put together webinars on our approach towards that, the 8-point plan, where we're looking at industry stats that could be used in the campaign. We're looking at competitors and their marketing, competitor marketing audits, so you could see what investors are going to be targeted with. During the course of your campaign, you could create ads, content, outreach messaging that's as strong, if not stronger. From that, you build out your target audiences, your marketing channels, and how to reach them both with paid advertising and organic content, the creative, the messaging, and visuals that will reach them across each of those channels, strategic partners that can help accelerate things, and then projections. I like to look at it as that numerical sequence: impressions, clicks, conversions, how many times an ad or a piece of content's been seen, how much traffic it's driving to an offering page, how many conversions, how many investments are coming out the other end. I know that's digital marketing language, but if any of this feels foreign, there's probably more that needs to be thought out for your investor acquisition, your investor marketing strategy. There are people to speak to in the space. I know we welcome a warm marketing discussion anytime. I feel many agencies in this industry do, and we work collaboratively around that. So you should be speaking with quarterbacks, you should be speaking with agencies, you should be speaking to your portal about these types of discussions. If they're not having the conversation with you, I think that'd be somewhat of a red flag, and productively just want to start mapping out where you're getting the traffic from. You may need 50,000, 100,000 visits per 1,000 investments. If you have 1,000 investments on your Reg CF, you're probably somewhere between $1 million and $2 million raised. $1,000, $2,000 average investment, as we'd say in digital, average order value, AOV. But the transactional value, it's high volumes of these relatively small investments. If you're not mapping that out ahead of time, you're kind of shooting in the dark. You're kind of crossing your fingers and hoping it all works.
Hey, Jason, let me just say something, okay? What you just said for the past few minutes there, like even myself, my head is spinning. If every founder that hears that, let's unpack this, okay? So I know Jason, I know DNA since 2018, 2019. At the time, they were like number one in the space. We hired them as a platform to find issuers that would come onto our platform and various things that we were doing in initiatives for ourselves. And they did a great job. We got to know each other. And then when we had issuers that we brought on board, I would just say you have to talk to DNA. So we funneled all of our issuers to DNA because I've spoken to everybody else. And there is nobody that understands this as much as Jason. And now that I know his team as well as I do, they're solid. So everything that he just said is like, it's jargon to me, a lot of it, you know? And I think that the founders are like, what did he just say? Well, don't even worry about it. You got to really just engage them and let them do their thing and advise you what to do, because they don't want your money. They want you to succeed. They're not free. You have to pay them, but they're professionals. There's nobody in crowdfunding that I've ever seen that does what DNA is doing. I should have said this up front, like during my introduction. That's why I joined DNA, is because I want to turn my network onto DNA, so that whether they're raising in crowdfunding, whether they're raising for a VC fund, whatever they're raising for, they know how to find investors to drive it to funnels for, whether it's a crowdfunding funnel, whether it's you raising in a Reg D, 506C, and you need to speak to investors who might invest 25,000, but after you speak to them, might invest 250,000. This is what DNA does. And okay, as far as like advertising on like Meta, you should see the team that they have working on this stuff. They know what they're doing and how to optimize. And you can't just say, I want to spend $100 a day or $100 a week or whatever meager budget you might have, because you're never going to get enough data. And then there's this pixel tracking that the pixel has to be informed. I'm learning. They know all of this stuff. So everything he just said, don't worry about it. Just engage them. They'll walk you through the whole thing. I'm telling you, that's straight talk.
I appreciate that. Unwarranted, of course, not unwarranted, unrequested, but appreciate it. And I can tell you how many hours have gone into that media buying process per week, let alone over the many years. And relevant to the portal conversation, we've built our own investor databases, over 1.8 million Reg CF and Regulation A Plus investors. We filter down by Reg D as well. But because we first started doing that with portals, they would share an audience over Meta. We would run advertising to investors that had participated in deals on their platform before. They were emailing them. It would show up on key areas of the site, the deal. But the advertising significantly impacted how many investments were coming on a daily basis. We'd upload the audience, run advertising directly to them, saw performance, saw cost per acquisition results under $100. I remember specifically on a major Regulation A Plus campaign, it was $91. First week was staying stable the first month. And I said, hey, I need to create audiences like this. It's great that the portal's sharing it with us. But we need to do some data mining, we need to work with some data partners, we need to build this out. And I had different lists shared with me over the years, but really dove into the details and how I could figure out who's investing in these deals, how I could work with data providers to get email addresses so I can build these lists myself. And then using that for campaigns now, that's how Nikki and the whole team working on advertising over here at DNA, we've been able to produce results that get questioned. Portals, other agencies will think, that they can't be producing cost per acquisition and return on ad spend metrics like that. I mean, there's groups in the space that'll say, 2x, 3x is good. where I could tell you, just going back to those numbers before, and I like to be, transparent, as informational, as educational as possible. So as Bruce is saying, if the numbers are, too much, it can, break it down and, on a one-on-one call, if we're working on a campaign together, make sure it all makes sense. But if you're driving
This is
traffic,
your what you just said is your
yeah,
differentiator. This
yeah,
is like what no other marketing agency has other than DNA. This is
no,
your differentiator.
yeah,
And you know what? The founders who like get into the nitty gritty of working with like the media buyer and trying to figure out audiences, those are the ones that I'm seeing succeed.
yes.
It's the ones that just maybe just delegate. I wouldn't necessarily just delegate. I would get into the nitty gritty if I were a founder raising with DNA as well. And that's anyway.
Yeah, exactly. There's a statement from King's Crowd with the review of 2025 and stating the founders that are most successful here, they're actually repeat issuers and operators, and they really understand what's occurring with these tools and what they need to shift. I can tell you as a marketer, that's the difference from a good marketer and someone who's just following what AI tells them around how to launch a campaign. It's that ability to manage to a point of effectiveness. Good problem solving abilities are absolutely required to be a performance marketer. Back to those traffic numbers really quick. With Meta, just because it's a primary channel, one that's commonly used, and one that is a top performer at that for these types of rounds, you can get a cost per click between $1 and $2. Whether you're running a traffic campaign and seeing some traffic come under $1 and a retargeting campaign around $2, $3, the point is every dollar, $2 you spend could be a new visit to that offering page. If you're seeing a 1% conversion rate, that would mean $200 cost per acquisition. Every $100 to $200 is a new investment on the deal. And then if you hit that 1,000, 2,000 level of investment as your average, these numbers are conservative in many points along the way here. I could talk to you about $100 acquisition and a $2,000 average investment, more of a 20x return on ad spend. But there is commonly a number used in the space of 10x return on ad spend, 10% cost of capital. I've seen that change over the past couple of years. A lot of reasons around that, but there's no reason you can't produce it. Sure, you may be at a 0.3%, 0.5% cost per acquisition, a conversion rate, and that would put you at a different cost per acquisition. But there's ways to enhance that and build a retargeting pool for less, and then be able to change things up accordingly. I can tell you some publishers like to overcharge a bit there, but we've worked on a lot of these deals that have produced significantly stronger return on ad spend numbers than what I'm referencing here, including these, and have published case studies. Every page, so much comes down to the page. That conversion rate number that I was referencing, that is the single most important metric. You have to maintain that conversion rate at scale. But Google says an average conversion rate is 2.35%. If you're at a 2% conversion rate, you're going to see twice the return on ad spend than you would at a 1%. Every page looks alike. Yours should not. Templates make every page identical, stand out with a custom branded page, looks like a proper site, not a portal form, strong assets in before launch. And this is the centralized location for all of your information. And that is how it's written in the eyes of the governing bodies. That is really all you can expect and ask for from your prospective investor audience. You can't think, well, they're going to look at all these things afterwards. Some of them will, and they'll be doing their due diligence. But if you don't catch them here and on the offering page, if you're not pointing at very attractive numbers, look at some of these numbers for Mode Mobile. Look how loudly they speak. Over 60,000 investors. They have over 60,000 shareholders. The share price, 88 million to date raised. You could look at all the publisher logos and the social proof there. The percentage growth, that was the year they were featured by Deloitte, top growth company. Look at all these brands, all these different partners that Rise Robotics has, and the numbers and the way this is written. These pages are going to be taken much more seriously than a page that has little raised, no publishers talking about them, no real partners to speak of. It's just talking about the product. I would spend as much time as possible on that page. Bruce, what have you seen work the best in terms of taking a pitch deck and really transforming it into an engaging, converting page?
Well, so there are two types of portals, one that have templates, and Title III funds had a template. So there are others that you can really customize it the way that I think it looks a lot better. It looks a lot more professional. We just didn't have that ability because the way we built everything. But I agree. I think that when you can customize a page to look like your brand, like it's your site, to me, it seems like the way to go.
This campaign's on Net Capital. Avadain uses somewhat of a template build, but the way the headline, the video, all of the third-party validators, all of the infographics around graphene company talks about the efficiencies, the strength, how it's stronger than steel, cheaper than all these other materials, how it could very much be considered a future of different production materials. Now, this is their fourth round. It just went live last week. It did over $1 million the first day. Had a webinar, large amount of that invested during the webinar itself. Now, fourth round, first round was about 1.375. Yeah.
They raised $1.7 million within 24 hours, but I went to Net Capital's website this morning to look how Avadain is doing. They're up to 2.2 million in just a few days. Mm-hmm. So you're doing something right.
It keeps growing. And yes, their first campaign hit its goal, got a bit of an extension, did a bit more, 1.375 million. The next one did 4.5, and the original goal was 3.7. It got approved by their board to go up to 4.2, then sold out, oversubscribed at 4.5. Waited an extra 2 years later, last year, raised 5 million in 43 days. It was actually quicker than that, but with the processing, it took 43 days to complete. So this deal's now live. Their offering page converts at very high levels, and they have this audience that was built in the first campaign. The 8 months it took to raise the 4.5 million, the audience that was built there, George Gilder, Harvard Angels Association, all of these different third-party validators to point to. Some of them are now reaching back out to their audiences. This is the central home for all of that to be showcased. This should answer every investor question. Can you do webinars and talk about what's on the page? Can you have social media content and email newsletters and different places to distribute articles and videos? Yes, absolutely. You want that to be found. You want to be intentional about what's found by investors when they're searching around and doing their due diligence. But this is where it all happens. This is where the pitch takes place. This is your, investment machine, if you will. I was going to say some other terminology that may not be compliant, but this is where you have to convert investors. You can drive all the traffic in the world to this offering page. If it's not converting at a decent percentage, your campaign's not going to move. So leave room for the full story. We're going to talk about a few approaches towards that, but build it for a skeptical, high-stakes decision. If you're driving people there for the first time, you have to be able to pull them in, not expect them to read every word upon those first few seconds that they may hop off. So I'm going to go over a few tips, a few ideas on how to do that here.
And let me just add that regulation crowdfunding, Reg CF, funding portal, that is the sole place where all terms of the deal have to be. There's no side conversations. If an investor has a question about something, they have to go on to the portal and ask a question there. Founders go on and answer the questions there, so that all investors looking at this deal see all of the terms of everything. That's the sole place where all the terms have to reside.
And the offering page has to pass this glance test. It's tough to get someone's attention today. If they get to a page and are expected to start reading paragraphs upon paragraphs, there's no bolding, nothing standing out to them, they're probably going to leave. Whether they're consuming 150 posts in their Facebook, Instagram, TikTok session, and now they've clicked through and they're on your offering page and simply don't have the bandwidth to stick there for too long, whether they're doing something else and multitasking and they're watching TV, they're watching Netflix, they're in line at the bank, they're pumping gas or connecting their car to an electric charger, or whatever it looks like. It's tough to grab them. And a few seconds on the first visit is all you can really ask for. If the titles, the headers, and bold words do the selling, they're going to want to go back and read more. But they have to be able to scroll through and say, yes, I want to do this. Paragraphs are the fine print. Not engaging means bounce. Bounce rate is an important number to look at. Engaging means converting. These are standout pages that Brendan's included in these images on these iPhones to the right. Rad Intel oversubscribed last week. 65 million poster board of what to do with Regulation A Plus campaigns. Over 20,000 investors. Jeremy Barnett, their CEO, birthday today. He is a mastermind, a genius. They have a marketing machine that works off AI. AI investments are doing very well right now, but it's how the campaign was marketed. It's how they talked about their clients and their client growth, which you can see in the screenshot. It's how they talked about their share price increases and their ticker symbol for NASDAQ, how that was reserved, and an advertisement with them in front of the building in New York and with the team and having the whole team present and everything they do with the PGA. And it's nothing short of a mastermind session if you really look into everything they're doing on their content and on their ads. But it's their page. They get millions of visits a month. Think of that as a storefront where you're selling the investment opportunity and millions of people are going through those doors a month. It's incredible. Daniel Film, WeFunder, one of the top entertainment deals that have been live this year. Second deal on WeFunder. Last year ran a 7-figure deal as well too. Biblical, faith-based community audiences, they get to this page, they see the highlights using the platform that WeFunder has built. They learn more about the project and where it's going to be distributed, and the producers, the directors, the team, everyone involved, the actors are able to watch a trailer here. Same concept, high conversion rate, but it's the glance test. It's being able to see these different highlights or bold headers and then going in to get that further detailed analysis. Bruce, what do you think about video?
It has to be well done. It's super important, and I think you can't leave it out. So work on it. Make a really great video, but not necessarily about your product, but it's mostly about why somebody should invest in what you have going on. I mean, who wouldn't want to watch a video rather than read everything? If you don't have a video, what are you doing? Just scrolling through a bunch of text. And the video, you can just cut to the chase, and then if it's interesting to you, you start reading the details. Keep it short.
Here's a campaign that did very well on WeFunder, Hempitecture, Reg CF. A few minutes top of the page encapsulates what a sit down with their founders would consist of, but with high-speed video, photo, imagery to really depict what they do beyond just hearing the team speak. Compelling from the first sentence, fast-paced, top-performing pages have one. You should absolutely have one. I've heard differences of opinion towards that. You could look at that as the DNA stance and position, but if you look at how many deals that perform very well have it, you should probably figure out how to use 2.5, 5 minutes in that top section, the hero section of your offering page to sell investors. Again, you could have millions of people going through this offering page. Make sure you're putting the best foot out the door. We don't believe what we see online. Layer the page with third-party validation as featured in investor testimonials. Got a hint for you. There's never enough. Social proof lowers investor skepticism. The more partners, media, podcasts, awards you could point at, and each week, the stronger your campaign is going to do, is the right way to think about this. What else should be planned before going live? Looks like we got a nice screenshot of Monday, our project management board on there. Well, planning the campaign before you go live. Go live is not the start of marketing. A content calendar mapped in advance, a headline-worthy announcement every week. To really think about that for a second. Headline-worthy. Would a journalist, would a podcaster, would a social media influencer actually care about what you're saying that week? There's a whole art to writing headlines that uses few words as possible, yet generate excitement. I was taught early on sales is a transfer of energy. I learned marketing is sales on a mass level. You're selling this investment opportunity, but to many people at once. So how are you transferring your excitement towards the deal around how your entity is growing to those prospective investor audiences? That needs to be communicated. You don't just put up an offering and hope you hit $1 million, $5 million, 65 million, 75 million. You get to dictate what the narrative looks like about your offering. Investors grab onto it. I've spoken to them. They'll repeat what we've written as copy on some campaigns. They'll repeat what the founder is saying as if it's their own original thought when speaking about the deal. So if you're wondering why work on the content, not a creative director, why does this stuff matter? The numbers speak for themselves. They should just be investing. That is the reason. You get to control how they think. If your content is engaging enough and becomes absorbed to the point to where they think it's their perception of the deal.
Just increases your chance for success. If you don't do it, or you don't have the money to do it, maybe go back and get the money and engage in this first, because why spend all of that effort and fail if you don't have to?
Exactly. And it's not the first touch point that they visit that they're going to invest. So you want to craft what that experience looks like. Put yourself in their shoes. But definitely start with your first screen network, email list, team, partners, friends, family, past associates, employers, employees, old contacts. I was always amazed. One of the first campaigns we worked on, founder in their 60s, tell me they were contacting fraternity brothers that they hadn't spoken to in over 30 years and getting them to invest at that as well. That's what it really takes, is a deep search. I've seen portals say, hey, put together a list of 200 people that you're going to directly call in day one about this deal. Start with your warmest contacts, go further and further down in terms of relatedness, email, call, DM each one compliantly, have them fit into your marketing stack, invite them to your webinar, have webinars of our own around content marketing, around webinars. Could be inviting them to a physical event. I've seen local businesses bring in their customer base and see hundreds of investments, see hundreds of thousands of dollars raised within a 24-hour window from that. So it could be the way you're asking them as well too. I can tell you there's always more capital available from the first screen network. Bruce, anything you want to add about the first screen network or how you wanted to see issuers win?
Okay, so as far as your first degree network, okay, let's assume that they have money to invest and they can take the risk of losing. You should ask them to invest. You should, if you're not going to be willing to do that, why would you ask anybody else to invest? If you believe what you have going on, in fact, when I was looking for investment, my way of saying it was, listen, I have this thing going on. It has legs. I'm going to make it happen. I'm looking for investors. I just don't want you to tell me in 5 years from now that, hey, why didn't you tell me about what you have going on? I would have invested. So I'm just telling you now. You want to get in? You can get in. You have to do that. I've seen issuers that came onto our platform that had a lot of social media following, but they didn't want to promote to their social media for some reason. I don't know. Were they embarrassed that they were raising money? I don't know what their problem was. But what is this all about? It's a matter of making your business succeed and making money for your investors. If you're not going to bring everybody who can afford to be in or can afford the risk to be in, then you probably don't believe it in yourself. That's kind of how I was thinking about it.
I've said the same thing in content before. You have your own doubt if you're afraid to bring others in. I was on a panel once where they said, if your mom won't invest in you, why would I? And I think about that when there's hesitancy to go after a first degree network. Want to fire through a few last pages here and then get to final comments, final notes. Avadane, the launch webinar, we talked about this a little bit just because it's so recent. Want to go back to it, where it's 1.7 million raised in the first 24 hours, large percentage of that during the webinar itself. We've worked on other webinars where it's over $1 million in a 24-hour window, 500K during the webinar itself. An easier ask than invest today. They watch, you bring passion and proof, and that transfer of energy. Minute 1, unsure. Minute 55, invested. Bruce and I were joking about this timeshare effect, and you go into a timeshare meeting and you're there for the free travel or whatever it may be, and by the end you're thinking or even buying timeshare because of it. The time they spend with you gets you further and further down. Something similar going on these webinars. Then go wider after your network, paid ads, and cold outreach. Seed publisher and podcast relationship early. I found podcasters to be, I'll call it low-hanging fruit in terms of press and high quality content. Deep stories, long form content. You could take a lot of clips and put in other channels. Long lead times, start months ahead. It could be 2 months from a podcast booking, then another 2 months before they distribute. So start early. Again, give some time before your campaign starts. Start early. Don't be afraid of spending a little bit on service providers or to be on a show here or there. You're looking to raise substantial, at least relatively substantial amounts of funds. Is it existing audiences first, always, and sell the story, not the button. Announce the raise and explain what it is, why you're raising, how the deal works, how regulated investment crowdfunding works. Ask them to back it, then share it. Peer-to-peer is the strongest marketing. On a successful case study of ours, we'll see 20 to 50% of the conversions come from ads. The rest come from peer-to-peer marketing. Portal audiences, as they see your traction moving, earned media and organic audiences don't know what the invest button means. You should really take the time to explain it to them. Where investment crowdfunding has been, early crowdfunding proves the demand. Reg CF goes live. Early raises were modest with some outliers. Actually, some good stories to tell around that. Record months as retail investors really arrived. I always think back to 2020 and the emergence of the Robinhood investor. Growth as the caps raise, cooling as current events weigh in. Where it's going, future of capital formations, digital. A fraction of small businesses have actually used these vehicles. Higher limits and easier filing ahead. More repeat operators, as mentioned earlier, more success stories. And it's a real opportunity right now. Our campaigns are doing very well right now because there's fewer, stronger offerings live, which means more room to stand out. Quality deals are still raising big. Don't let anyone tell you otherwise. I could tell you during any news cycle which campaigns of ours were doing really well. And there's plenty of people telling you, hey, Facebook ads don't work. Reg CF doesn't work. Any number of these platforms, they don't work. I've heard rants and raves about all of them, every single one, and some of them weekly. I don't want to say it's the groups that are not performing that are saying that. It could be a mix, but you want to look at who's doing it successfully, who's really using their portal to the fullest ability. That's who you want to talk to about this stuff. And a slower field with real openings. So this is a marketing play. We talked about the traffic numbers and the conversion rates. Be a genuinely quality company first, then position it for the public, ask them to back it, then share it. Peer-to-peer marketing is the strongest marketing, as we said. And this is a branding play, more than just a capital. You're going to get awareness and audience building out of this. You're going to get press opportunities that carry on well before the deal. So be a genuinely quality company first, position for the public. As said, most founders never learn how the page converts or the campaign stalls. You want to be able to manage it. So last page here of how to set yourself up to win. Start early, budget realistically, stay engaged, and do the work. Don't think it's just going to happen on its own. Hire specialists who know what converts. I know it's an expense and you're looking to raise capital, but it could mean the difference of a successful campaign or one that gets shut down and funds returned, does not hit its minimum goal. I have plenty of examples around that. I can tell you plenty of examples of campaigns that hit their full goals and we're going to stop early, and with the right coaching, we're very thankful that they raised millions more. Treat marketing as the campaign, not an add-on. And that's what running a campaign that actually converts looks like. I would reach out to Bruce if you're not already connected on LinkedIn. Reach out to us through our site. Always happy to have a warm marketing chat. Strategy, page, funnel, traffic. We replay and send this to all registrants. So thanks for tuning in here. Bruce, any final statements you want to add?
No, I think I said it all. We're over time, and thank you for having me on. I appreciate it.
It's been a pleasure. Thank you for tuning in, everybody. Feel free to reach out, and we're happy to have these marketing discussions with you. And we'll see you next month. Take care.
Bye, guys.